Hey guys, good day, good morning, my time, and wow, yeah. So to be very honest, I really did not have intentions or plans to share a video on my projection on XAUUSD before I sent that poll. Yeah, but I realized this could also be helpful, in addition to just the chat markup I'll be sending after this video. Yeah. Yeah, just to say, I really do not trade gold. I've never traded gold before, and I don't have plans to trade gold anytime soon. Yeah, but I decided to check up on this because one of my mentees, requested that I do it for him. So this is me making a video on some of the explanations I made. Of course, price was not here when I made when I did the markup. It was somewhere. Let me go to the daily time frame. Let's see. That was somewhere around here before the last previous eye was taken. Before this eye was taken, I think it was around here when I sent it, and I was optimistic, yeah, and anticipating price to take out this, which of course it did. And overall, I'll be showing you where my expectation is long term on this. So let's go back to monthly time frame, then we kick off from there. Right. To understand, this is an asset that is very volatile, and of course, every asset is subject to change. But this is my own point of view from what I'm seeing currently in this market. All right. So from this time frame, apparently we are in a bullish market. Yeah. From the monthly time frame, yeah. So it's safer to look for buys and all that. Yeah. So as an ICT trader or smart money, the first thing you want to establish is your draw on liquidity. And okay, maybe not the first thing. The first thing you want to establish is your market structure. Then the second most important thing is draw on liquidity. And by that I mean, where is price likely to be drawn to, or where has price been drawn to in the past, and subsequently where is it likely to be drawn to next? These two questions are most basic, but however the most important question you should always ask yourself at time when you are trying to plan out what price narrative is saying at time. Now, so this is a multi-time frame, and of course we're working on dealing ranges here. So we have several dealing ranges to work with, internally from here, but the major one I'm seeing is from here to here. I mean, from this standpoint on a monthly time frame, I've seen this dealing range from here to there, from this low to this high. Yeah, of course, I do not expect price to come all the way down going up. So this is just to establish that dealing ranges are levels that you want to watch out for when you're buying or selling. Yeah. So from this monthly standpoint, I think it still came back to our 50% level before eventually going up. In as much as I know that this is not the dealing range I'm working with on this time frame, but still, I think it's still kind of valid in the sense that it's traded into the 50% equilibrium point before pushing back up. Yeah. So from the weekly time frame, I'll be taking out this. Now because the dealing range I'm working with is not on the monthly time frame, on the weekly time frame. And why is that so? Now we have a swing low here. I don't want to start from here. You can start from here, not bad, but I don't want to start from here. I mean, starting from the nearest swing point. So you can start from here. We have the swing low here, the high swing low, higher low, higher low. And I think we had a higher high here. We did not have a higher high. We had this kind of swing high here, which was lower high, which of course I'll come back to later. All right, so the swing point I will be working with is this one right here. So we had a swing low here. This is a significant swing low that should capture your attention. Yeah, swing low and swing high. So that is the daily range. Sorry. That is the daily range we'll be focusing on largely right now. So take your gun box. This is what I use to establish my dealing range. Dealing range basically helps you to understand, for those that are new to the channel, helps you to understand where you should be buying and where you should not be buying in the market. So anywhere around here, this region here, is what I call premium. Anyone around here is what I call discount. The video, I've sent like several videos on that, so I don't want to waste much time on that. So from here to here is like 100, and half of 100 is 50. Of course, that's simple math. So whenever price gets to 50%, that's equilibrium. So if it gets below 50%, it is cheap. If it goes above 50%, it is expensive. So below 50% you buy when it is cheap, above 50% you sell when it is what? Expensive to make more profit. Yeah, so when price gets to a dealing range, there's certain points of interest which ICT calls arrays. You must have heard of arrays. So there are certain points of interest that should catch your attention once price begins to trade into any of these array, any of your premium level or discount level. Yeah, so in this case, the moment price traded in here, now we have several arrays. I don't want to start mentioning them now, but one of them is order block. We have order blocks, we have replica blocks, we have mitigation blocks, we have fair value gaps. We also have IPA candles and all that. But what price traded into here before pushing up is an order block. Clearly, I'll take this off so you can all see what I'm saying. Sorry, I'm a bit too fast because I need to attend to something ASAP. All right, so this is an order block here, a classic one at that, and boom, it held, of course, because it's at discount. So if you're buying at an order block that is a premium, you're buying expensive. So there's every chance that you'll be liquidated before price goes your direction. So take note of that. So this is an order block that is at discount, within discount level of detailing range, and most price trade in went up. But that's not even the point or point of discussion for now. And the point of discussion is that having established that we are bullish, yeah, which is of course the market structure, the next question or the next objective is look for why price should go to where you want it to go to rather. So you're bullish here. So the question is, if you're buying, what is your objective for buying? What is your target? Your midday target, your intraday target, your weekly target, your daily target, or your weekly target? It's simple, yeah. So I'll take this off now and I'll begin to break this down one after the other. The moment price traded into this level here got established from where? From an order block that was strong enough to pull price up to sponsor that up move, yeah, to the upside. Of course, as you can see, this price came down with a weak, the closure of a week, or we closing with a week rather, and not the body candle inside this point of interest, which indicates that there's a kind of stop on around here. So sellers have been taken out. Simple smart money idea, taken out before pushing up, sponsored with a heavy momentum candle to the upside. And the moment it went, it created this swing high, came down, established was sell side liquidity. So when price moves, I've always said that countless times, and this is one simple fact you need to get used to. No matter how much I say it, you should not be tired of hearing it, because that is the truth about markets as far as ICT is concerned. That is what moves market: liquidity a million times. Yeah. So when price goes to take liquidity, and it moves, it goes to take liquidity. When it goes to the buy side, it goes to take out buy side liquidity. When it goes to the sell side, it goes to take sell side liquidity. It's always as simple as that. That is the circle. Simple. So the question is, where would be your next draw on liquidity after one has been taken out? How do you establish that? It's very simple. Now, there are certain levels of liquidity. We have at every swing point, there's liquidity. Here we have liquidity. Here we have liquidity. All around here we have liquidity. Everywhere. Now, there are certain points that would validate your point of interest when you begin to see liquidity around it. Now, the question is, where is that? Now, look at this point here. Take this out. Now, this is for those who trade smart retail concept. This is a very strong support level for those who trade support and resistance, which of course I wouldn't deny, because the times it came in and pulled off from there. But you know what most people were not aware of is that price was engineering more of liquidity. Liquidity is basically just like money, actually, in a simple term. But according to ICT, it uses kind of different terminology to describe it, but to define it rather. But then for a layman, liquidity is basically money. People that bought here place their stop losses here. So when price kept on buying, kept on engineering more liquidity down here, man, eventually came down to take out those stop losses. So it's just like a fuel that comes to be taken, and when it takes it, it goes the opposite direction. So the moment you took out sell side liquidity here, boom, it went back up to the opposite direction to take what? Buy side liquidity. And we are the buy side liquidity. We have so many of them. We have this, we have this, we have this. And it eventually came to take out this high that was not taken the first time. And why did it come there? Now, there's a concept of liquidity we call relative equal highs. Relative equal highs are highs that are not exactly at the same price levels, but almost equal. As you can see, this one here is a high that is not as equal as this, but they are very, very equal. So what retail traders do is that they trade off from here. They call it double top. Yeah, I think double top or something like that. Yeah. So they are relatively equal, but not exactly equal. It could be a little bit below. Sometimes it could be a little bit, above. It could be a little bit above this initial high here. They are still relatively equal. Yeah. And they are, of course, old highs as well. Yeah. So about where we're coming from. So the moment price traded into here after taking sell side liquidity, went back on the trick or buy side liquidity eventually. So we're gradually moving to where price is currently. Now from here to here, we have a swing point. This is the swing low. Oh, sorry. This is swing low, and what? This is the swing high. And then use this swing high. And that's the swing high. Yeah. Same thing I did on the monthly time frame is what I'll be doing here. Why? Because at every point in time in market, either on the lower time frame or higher time frame, price is always establishing what is always establishing the ranges. It's always establishing daily ranges. Now this is the daily range that we're working with on this time frame, weekly time frame. Based on this structure I'm seeing here, this is where price is currently, not here. But we needed this price action here to establish where we are going. Yeah, because basically we do top-down analysis to check historical data so as to know where price could possibly in the future. So here is it. Yeah, so here it is rather. And like I said earlier on, anything below 50 you buy, anything above 50 you sell. Yeah. So the moment price traded into this level here, which is below 50, into one of the arrays I talked about earlier on, which is what, an order block, you want to start looking for buys. Yeah. When you start looking for buys, what are you targeting? You're targeting liquidity. Now I want to establish that clearer. Now you don't just want to take any order block you see at discount level. Now there's certain order blocks you want to start focusing on, and one of them is order blocks that has been mitigated by a previous order block. Sounds like it was not too clear, so I'll explain that shortly. All right, so this is an order block here at discounts as shown earlier on. Well, we had an order block here actually before that, the new order block. This is another block. Oh, sorry. It's an order block here. If you want to find a valid order block, look for an order block that probably got mitigated before the current order block you're looking at. Now this is an order block that got mitigated by the order block. ICT calls it proportion candle. So a proportion candle is more like an order block closing inside an order block. So this is an order block, and as you can see, a new order block closed inside the previous order block. So this is one of the valid order blocks that you can use as a strong point of interest to support price to go to where you want it to go to. So if you want to buy from here, the question is, what will be your objective for buying? That should be a very major concern for every ICT trader. If you want to buy from here, what should be your objective for buying? As price taking out buy side liquidity before coming down. Let's say before price came down here, probably from here it went up and came down to this point. Me as a person will not be considering buying anymore because the objective has been met, which is of course this high here. But as you can see, price actually took out this initial high, which is the buy side liquidity. And when buy side liquidity has been taken out, it comes to the opposite direction to take out sell side liquidity. And as you can see, we have so many sell side liquidities here. We have numerous sell side liquidity. We have so many of them here around here. And the moment it took every single sell side liquidity here, it needed what? Enough fuel. Sorry, it now had enough fuel to push price to the upside, which is currently happening. Yeah. So if you're buying, what will be your long-term target? This high. We have some internal liquidity inside here. We have internal growing liquidity here, internal growing liquidity here. I think we also have a favor looking up in here. So perhaps I'll be expecting price to trade into here. This is just like an a general overview and possibly retrace before pushing up. Yeah, but my overall target would be this buy side liquidity. Yeah, it's as simple as that. It's an old high, is a weak high, and I think you should also be a previous weekly high or something like that. Or previous month, yeah. When was the last? Yeah, I got created on 23rd of May 2023. This is a very old high. So I'll be expecting price to eventually reach this high, coupled with the fact that you've been bullish. Now look at this. Look at this order flow. This is a bullish order flow. Price traded off this order block, but came back, traded into a new order block that was established and broke multiple structures to the upside. Another block, bought other block. So when you begin to see price being supported by a bullish order block to the upside and you want to start selling, that is a counter narrative to price action. 8 or 9 out of 10 times you'll be wrong, because price is basically telling you that the order flow is in a particular direction, but you are swimming against the tide because you're trying to squeeze in your own perception about price action at that point in time, which is very dangerous. Yeah. So here is the level I marked out basically from the daily time frame. I think we had a very small. Yeah, I think we had a very small point of interest about it. Yeah, this level here, this IPA candle here was the level I marked out, and price was around here when I sent it to him the other day, and I was saying that price will target this high, which eventually happened. Yeah. So the next draw on liquidity is here. You see all these highs here. I have 80% confidence that price is coming for those highs. You see these highs here. So if you're selling from here, you need to be very careful. You need to be very, very careful. As a matter of fact, I would not advise it at all. I would not even say use proper risk management. I would not advise it. It doesn't make any sense to sell from here because price is going for those highs. Yeah, it's going for this high here, and most likely trading into this fair value gap in here. So the long-term objective is to target it high. So the question is, how do you join this setup? It's simple. Now, when price goes in here, when it trades out, takes out this buy side liquidity, everything in here, you'll be expecting price to trade off probably from this. I think we have looks like a flip around here to come in, probably trade into this breakout block here, then before pushing up. So this is one of the ways you can join if you are willing to be patient enough to allow this setup to pan out. This is the breakout block here. I don't know how breakout blocks work on gold. Like I said, I don't trade gold. I've not traded it. But it looks like something that would work because we have a breakout block in conflict with an order block, sitting side to side. This is just like an overlap. But most times when you see something like this, it should serve as an additional confluence, yeah, for price to push up. Yeah, so look at this eye here. It will be taken out most likely. This eye here would likely be taken out as well. So that is my draw on liquidity, and that is why I'm expecting price to still push up. Now, I won't be expecting sales because if you're selling, what are you selling to? When price has finished its sell side objective around here. I mean, that is the question you should always ask yourself. Establish why price should go to where you're expecting it to go to, and find a logic, to back up that anticipation or that expectation. It's always as simple as that, and price action becomes extremely clear to you every now and then. Yeah. So that's it on the daily time frame, and I think if you go on 4 hours, I don't know. I think this looks like a flip to even on 4 hours. I don't know if you can find one there. Actually, it looks like more or less like a flip anyway, although not my perfect template example of a flip anyway. So this is my long-term objective. I will be expecting price to take this eyes here, all these eyes here, probably trade into this one, and eventually take this eye here because it's also a weak eye. Why is it a weak eye? Simple, it did not break this structure to the downside. This is the last weak point that created this eye. So it couldn't break the downside, so there's every tendency that if it goes back up to take out this eye here, and this eye is still relatively equal to this eye, just like I said the other time. At times that even if it nicks it, it can still be considered as a relatively low. Equal eye to the previous one. Yeah. Called the stop point, but I consider that as a relatively low. Yeah, because it did not break structure to the downside. I wouldn't consider this as a break of structure. This does not look like a weaker structure to me here. All right, so that's my higher time frame standpoint on this. So you can look for entries on lower time frames. You can look for entries. So I think I saw some on lower time frames already, but I don't trade good across. So that'll be all for now. Look for entries and join the buys, and avoid sells. If you're looking for sells, it should be a long-term sell objective. But major draw on liquidity to the upside is here. This level 1987.75 and 1993.00. Yeah, so that'll be all for now, and I hope you make the best use of this video and use the explanations in there to support your buy narrative to the upside. Yeah, so that'll be all for now, and I'll be sharing the screenshot of what I sent to him in the afternoon, so you see exactly what I was talking about. So that'll be all for now. Thank you for watching. Until next time, goodbye.